Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Thursday, June 16th. The year's 2022. Let's talk trading. You make trading hard. As always, these videos are for educational purposes only. Your results may differ from mine. Why do you make trading hard? Is it because there's something you don't understand, something you don't believe, something you don't trust? You don't have the confidence. You're afraid you're going to lose money. What's the reason you make trading hard? Trading is so simple. You know, we look at these charts, and most of us probably use candle charts. I know some people like to use Renko candles and some people use bar, but we're pretty much looking at the same data. But why do we make it hard? Is it because when you get your trading platform, there's probably at least a couple of dozen indicators that it comes with, and you go to a trading forum and there's hundreds, if not thousands, of indicators you can download, and people are trying to sell you indicators and systems, and there's seminars and what online blogs and Twitter groups and Signal groups and Telegram groups. I mean, there's just so much coming at you. But, if you've been, watching my videos, especially from years ago, I always say trading is simple. It's pretty much, up and down, buy, sell, profit, loss. It's pretty much everything is almost binary. You're either in the wait state, or for a couple of seconds you're buying, or a couple seconds you're selling, but you're pretty much in the wait state the whole time. So what about it makes it so difficult? I mean, you put a trade on and it goes against you, and then you put another trade on and it goes against you, and you put a third trade on and it goes. It's like, why do trades keep going against you? It's like, and you come back and you look at the chart, like, I mean, today would be, it's almost a stellar example. I mean, if you look at what's going on in the pound, we all knew there was news coming out. Now let's put this on the 1 hour chart here. We knew news was coming out, and then they punched it down, and then look where price is right now. And this is what's so funny. I mean, look at the range. We've got 243 pips of range, it looks like. And this is what's really funny. I woke up early, but just to let you know, I'm not trading today because I've got places to go, things to do, people to meet, and my mind's in about a dozen different places. So it was like, it's not. I wasn't suited for trading, but I called Walmart, and he said he got part of this big drop, and I said, "Hey, Walmart, do you notice where it turned around?" Right, it came down and it hit 40 and then turned around. What do I call 40? It's the launch pad. Well, while we're on the phone, I'm trying to remember where price was. I think price was right around here, around 2110. And then it was coming up, and we're still on the phone. And then he said, "Hey, look where price is. It's getting ready to get into the launch pad again." Well, it hit that 40 launch pad the second time, and then it launched. And now, just now, price went through the third 40 launch pad and it launched up again. So, what's so hard about trading? I mean, I know price likes to go to the launch pad. It'd be simple just to have buys at all these levels. And that's it. In fact, I was teasing with Walmart, saying, you know what, I'm thinking I might just set up an EA, let it run, and every time price comes to the 40, or in the 40 area, just buy. Put a 10 pip stop loss or 11 pip stop loss, somewhere down here, or maybe 15 pip stop loss, and then put a 20 TP, because it usually runs 40 to 60, and just see what happens. mean, something as simple as that. And you can see here today, boom, 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 it would have paid off 3 times. But what's going on though? So when it got to this one, I'm thinking, well, it's already launched once. It's already been, you know, gone 100 and some pips. So probably wouldn't be a good idea. But you see right there, there's a mistake. You just, and my mistake was, I think. You don't think. Thinking is done when you're not trading. When you're trading, you're supposed to be trading, not thinking. All your analysis should be done before you sit down to trade. You do your analysis on Saturday when the market's closed. Then you can go back, look at the charts, figure things out. Because when you got money on the line, then things start to change psychologically. So just stick with the system. If it hits the 40, and because here it did it yesterday twice, hit that 40 and it launched. It did it again here twice yesterday. And then if you look and see what the market did, it's almost like, history kind of repeats itself. A big drop and then a bounce. So question is, why do you make it hard? That's one of the reasons I make it hard, is sometimes I outthink myself. Another thing is, if you notice, you got the daily open line, and usually price will, actually I need to change something here, I just see. In the latest HL5 indicator, let's see. Where did I put that? There's so many show lines start at bar. Let me set that to true. Because I just noticed something, that this open line was going all the way across here. And this is another thing, trading the daily open, buy zone or daily open cross, same with weekly and monthly. And once again, they're simple trades. We go over these charts, and most of them are horizontal lines that stay fixed, and there should be no reason for these to be hard. Okay, 1, 2, 3, 4 haven't filled the gap, and this really isn't a gap because it says 0, so it's less than a pip. But notice here we've got the opening range for the week. Price dipped below that opening range low, so there was a short opportunity there. Then it came back across. If you wanted to take it the other direction, there was an opportunity. We put in a yearly low a couple of days ago. We're 324 pips off of that low. I mean, if you look here, once again, horizontal lines. Yesterday, it dipped into that wick zone, and we know price doesn't like staying in the wick zone. Again today, came out of the wick zone on the bottom side, out of the wick zone on the top side. You just have to be there and take the trades. Nothing to think about. Statistics. You put the trade on, set your stop loss, and then you take profit. Now, this is yesterday when I was trading. Once again, I was in the middle of something else, but I knew FOMC was coming out. And I've been looking at the dollar yen. Let's see. Let me see which chart do I want to switch it. Yesterday was an inside bar. There was a nice break here at 2204. But I want to get to a chart that I want to show the dollar yen. Well, just about every pair is like, I think there's more 200s than 100s. And look at the pound yen, 381. Okay, not the buy zone, but you can see here once again, simple horizontal line trades. Why do we talk ourselves out of it? Is it because maybe you got your fingers burned once or twice? And one thing to note here, let's say you got long here and then you rode it and then price came, you were underwater, then price came back and there's just maybe 1 or 2 pips and it failed to break this high, then the price is going down. And you don't know at the time, but it's like, hey, if it's not moving or if it stops and you're right there, you scratch the trade, maybe you're up a pip flat or down a pip, it's, there'll be another trade that's a lot easier for you. Easier meaning when you get in the trade and you start to make profit, it'll keep going up. It won't just stop with a less than a pip profit. And that's one of the things I've been considering is I get in a trade and if it goes up and if it stops and I've got, you know, less than a pip, but I've got a profit, I'll just scratch that trade and say, I want something that's going to move and not put me in that position where it's going to show me you know, a couple of points and then take them away and then it sucks me underwater. Let's see, we got the pivot. Bambino Flex was saying to go long, so that was there. We took out the pivot. I need to find a chart that I wanted to show you traders. Let's see, looks like we're heading towards that weekly pivot. We've already taken out the monthly. And there's the upper wick zone from yesterday's daily candle. Let's see, maybe I can show it on this chart. No, because I don't have my no, not time to. Okay, yeah, let me. Yeah, in fact, here it is. The let's see, I got to show yesterday. Yesterday, right about here, what happened was, price had peaked, and I saw what it did. And so what happened was I got to the game a little late. Let me do something here real quick. Where is short shift, short auto scroll? I don't see the triangle. I'm going to pause the video. Well, anyway, what happened was yesterday I put a short on the yen, and I moved my stop to break even +2, and I was up at like 10 pips, but I had my TP set at 34.50. Well, as I texted the Walmart, I go, I don't have to tell you what happened next. That sucker came back, took out my stop loss that I had moved, and then went down and went to where my TP was. And it's just one of those things where, like I always talk about the market structure traders, they might have it where they keep it really simple. They enter the trade, they put their stop loss, they put their TP, and then they leave it alone. They either stop out or they get what they wanted to get out of the trade. And I'm thinking I might have to take a page from their book because, you know, I I've moved my stop, and we've talked about this on other videos, and then price just seems to like to come, take out that stop, and then continue on. So once again, that's what makes trading so hard is that we do things that we get in our own way. We need to stop that because it's not what you trade, it's how you trade it. So go out there and train the banks. This is the Rumpled One, over and out.